that people don't like to buy when it's on discount, which is very interesting.
It's true. When stocks are down, I mean, the stock market is the only place where people run out the store when things are on sale. I was listening to Howard Marks, right? Yeah. He says people get fascinated by something new and they tend to hype it up more. Yeah. So in 2000, technology, internet, it was a new phenomenon.
The thing is, when these companies, when we hit a recession, luxury companies like LVMH, boat companies as Marine Max. Yeah. That's another one. They hit the fan. They really, really hit the fan because their sales just tumble.
And that's why investors need to be careful with these overvalued companies. Yeah. Like any little bit of bad news and the stock is down 40-50% off the market. You're in trouble.
Welcome to the Takeoff Experience, where I sit down with highly driven people to talk about their journey, their failures, and their successes. If you want to take off in your career, your business, your finances, or your mindset, then this podcast is for you. This episode is sponsored by Money Hub, a platform that allows you to see all of your current accounts in one place and also provides you with smart money management tools to help you get right with your money. Welcome back to the Takeoff Podcast. How are you guys doing today?
I'm doing good, thanks.
Yeah, we got Wes back in the building today. We've got one of his friends as well, Josh.
Yeah, Josh.
How you doing, Josh? So you're also an investor, right?
I'm also an investor, yeah.
Yeah, awesome. Yeah, what did you say?
Foreign value investing.
Foreign value investing principle, yeah. So I'm going to call this episode probably Value Investing, the truth about value investing part 2. So how's it going in the stock market for you guys at the moment? You can go first.
I'm actually not too phased. I mean, it's going down, but obviously as the stock market goes... Oh, yeah.
What's that?
Rates up slightly.
Yeah, so you're comfortable.
There we go. Cheers. Yeah. So yeah, like obviously the stock market's going down, but as it goes down, the risk decreases. But personally, I feel all the stocks I bought, there's a sufficient margin of safety. I bought them below their intrinsic value. So even though I'm down 16% on some assets, I'm absolutely calm.
Okay. Cool. Love to hear that. I love to hear that. And since we last spoke, Wes, how's your portfolio?
My portfolio has gone up. So from last time, I think I'm up 2% year to date. So, that's pretty good. Fine in terms of, the market's going down. I'm just remaining calm, keep looking for bargains. Yeah. That's it really. I'm not changing anything. That's about it.
And I think that's the best way to be. Like, you both clearly have a process that you're following and you're sticking to it. And I think, it's very interesting. I think you did a post actually, Wes, recently, where, it might have been an old post that I looked at where you said, it's funny how stocks is the only thing that people don't like to buy when it's on discount, which is very interesting.
It's true. When stocks are down, I mean, the stock market is the only place where people run out the store when things are on sale. It's just insane to me. Like, people feel comfortable buying things when they're going up, but when things are going down, they think stocks are risky when that's not the case.
It's riskier when it goes up.
Yeah, exactly. So... yeah, I think it's just a psychological thing. Yeah, people don't really know the true value of what they hold. So if you know the true value of what you hold, you're more likely to stick to your process and check your work, make sure nothing is fundamentally wrong with the company, and just buy all the way down. And that's what I've been doing with a number of my holding, like Baba, Facebook, PayPal, just to name a few.
Okay. Yeah, I started investing again, and I'm in those companies as well. I think Meta and Baba are probably ones that I'm probably more bullish on. PayPal, we'll see. PayPal took 3% from me, so I'm like, How about you, Josh?
So what assets I hold?
Yeah.
So currently I've got a leverage short on the Nasdaq 100.
Okay, you're doing leverages now.
Yeah, so that was... So far, I'm sitting on about 80% return on that.
Okay,
so I did pretty well. So I looked at...
Did you 2x it or just...
3x.
3x
so,
it?
Yeah, I went
going all in.
You went 3. Okay, so when you're thinking of closing, you're sure.
See, that's a difficult thing. So there's this thing called the Buffett indicator.
Okay, I know that,
Yeah. So when that reaches a fair value, I will probably consider selling that position. But the other assets I hold are Baba, Meta, 10 cent, and that's it at the moment. Unfortunately, I've had to liquidate a few positions, but I plan to enter the likes of PayPal, VipShop, etc.
That's good. Wow.
Yeah, so we pretty much own the same thing, me and
Yeah.
him.
Okay. Okay. I got so many follow-up questions. Okay. First, can you explain to people what a short is? Because I was just being mindful that some of the listeners have never probably invested in the stock market, or maybe beginners in the stock market. So what is a short?
So a short is when basically you bet against the company. Now, Bill Ackman demonstrated it very well. If you had some coins and I thought those coins were going to go down in value, and I was like, can I borrow those coins? So you give me the coins, and at the current time they're worth £100, and I sell them immediately, and I've got £100. And then they go down to £80. I purchase them for £80. I return the coins for you, and then I keep the £20 profit.
Okay, cool.
That's basically how
That's
short
great.
works.
That is great. And then you say leverage. What does leverage mean as well?
So,
I'm getting all the explanations.
So, for instance, I leverage the Nasdaq. So, if it goes down 1%, then my Nasdaq short would go down, up rather, 3%.
Okay.
And obviously the other way around.
Yeah.
So mine's a 3 multiple.
Okay.
So it just multiplies the losses or returns.
Okay. Wow. And then the final one, Buffett indicator. I'm going to get you on that one. We mentioned Warren Buffett. We have to get an explanation for that.
So off the top of my head, the Buffett indicator compares the total value of the US stock market to the gross domestic product of the United States. And it measures that as a ratio. And that's basically a way you can sort of determine the value of the S&P 500 because you can't use discounted free cash flow. No, what's it? DCF model.
Yeah.
So you can't use a DCF model to determine the value of the S&P 500, but you can use this.
Okay. Wow. Yeah. Fantastic. Great explanations. Okay, so we all three of us own Baba. You know what happened today?
I haven't actually checked.
You haven't actually checked. Okay, yeah. I always like to because sometimes there is news, sometimes it's not. Sometimes when stocks go down, pretty much I think. Well, before I came, the stock market was down, pretty much all of it. Not for panic, it's just of interest. Okay, search. I noticed Baba was down more than others, and it's like, okay, what's going on here? Down 8%. Do you know the ones that always hold up well? And it's annoying. Google, Apple, Microsoft, the ones that you want to go down a bit more. They always hold up well. So it's like, Baba, okay, what's going on? I checked, and they got fined over the weekend, apparently. Them, Tencent, and
I think it was Billy, another one.
And the cab hailing one.
Didi.
Yes, and Didi. Yes. So apparently it's to do with them acquiring companies and them not reporting it. And this is going all the way back to about 2011. Yeah, going back. This is what I'm worried about. Going back all the way back to 2011, but their fine wasn't like crazy. I think for each case, I think the maximum was like, I've got it on my phone here actually. It was about 74,600. So Tencent had about 12 cases. So their fine was about $895,000. Nothing. And then Alibaba's one was $373,000. Which is that's not even a percent of their revenue.
And they've lost like 25 billion in market cap, and like
it's crazy, isn't it?
Yeah,
like how jittery the stocks are in there. So how you guys feeling about it? Have you like changed your?
I mean, it hasn't like damaged the fundamentals of the company.
Yeah.
And the of today, it's just can't overreact. To me, it's nothing serious, to be honest. It's pennies to them. They'll be fine. So yeah, just keep calm, really. Yeah. I know a lot of people was messaging me saying, "Do you know that Baba got fined?" I'm like, yeah, it's fine. Like, it's nothing serious.
Yeah.
So yeah. What about you, Ho?
So personally, I'm not like bothered to talk. I didn't even know it happened. That's how much I take this seriously. I'm not, and I think we all have to understand when it comes to the sort of like Chinese Communist Party. Obviously, their goal is to sort of become more dominant and more influential in the world. Now, via sort of Chinese corporations is a good way to do that. Now, they don't want to batter these companies like useless. They still want to remain controlled, but they still want them to be able to compete with American companies. So when it comes to these things, I'm not too worried because obviously they've got to act in their own interest.
Yeah. Yeah. It's such an interesting one because a lot of people will say what you're saying that why would they do that to their own companies, right? They just, it's going to mess up their own potential, right? And if you know, at the end of the day, right, as of course they've got like 2 billion population, but you're going to still rely on foreign investment. You're still going to want investments from Europe, from the US. And if you're spooking them away, you're losing that. In some sense. So there's an argument for that, but then there's obviously an argument where a lot of people will point to, well, the education sector with a snap of a finger, they just wiped it out, right? Which is interesting. But I think I'm with you guys both on it. I think Alibaba, from an e-commerce perspective, there's not much that they can do from that perspective. I don't think that they're gonna, wipe them out. Neither with Tencent. I know that there's an issue with gaming, but again, I think it's more trying to keep them in check rather than to crush them. Another issue that happened recently, Twitter, Elon Musk. So I never thought it was gonna go through. I think I actually posted. I don't know if you remember. I posted a story saying I don't think it's going through from early. I said it's not happening. I just wasn't convinced why he was getting to it. I was like, this is so left field. Like, why is he doing this? I just wasn't convinced of, if you're going to get a platform, it's not going to be, in my opinion, Twitter. There's loads of, I think there's more superior social media. That's just my opinion. But why would you wait? How much was it?
44 billion.
44 billion or something like that, like on Twitter. What do you guys think about it?
You go first.
I mean, it's ridiculous, really. I mean, again, like you, I don't understand. Like, it hasn't produced profit in its 40. How old is it? Like 11 years old.
Yeah,
it's quite an old company. Like, why would you buy it? It is really strange, and the reason for acquisition, it doesn't really make any sense. But I do think when it goes to court, it's going to be like bloody for Musk, certainly. And personally, I don't think he will win. I think he might be forced to purchase Twitter.
Yeah, so if he got forced to purchase it, then, and he obviously doesn't want it anymore, then how's it gonna work? Like,
I mean, maybe he'll sell it immediately, but I mean, he took them for a ride. Let's be honest, right? Like you remember they didn't even want to sell, and he kind of forced them to sell. So it's like you went through all of that. To just be like, to make up silly reasons.
Bots.
What's bots? Honestly, what's that? Is that really why you wanted to? Is that really was the deal breaker? Bots. It could have never been. Even if Twitter was 50% bots, you can't convince me that you were buying. I mean, even in your reasons, that wasn't even a reason. You wasn't trying to buy Twitter because they have the biggest user base. They don't.
No.
They don't have the biggest user base. So I wasn't convinced by that. I think from early on, he probably, I don't know. I think Elon Musk is he's a little bit of a troll. And I think he was just trolling, in my opinion. I think he was trolling. He was seeing what he could do. He was seeing if he could flex his power. It worked out. And then now he's trying to kind of step aside. So, yeah.
Yeah, I mean, he even sold some Tesla shares for it, didn't he? So, are Tesla shareholders angry at this? Like, I mean...
They're happy. I mean, and he got banks apparently to help with financing and all that stuff. So he's just taking people for a ride. He actually has a track record of being a troll, in my opinion. If you think about the whole Dogecoin stuff, the whole Bitcoin fiasco, he has got a track record. Even before all of that, remember he used to tweet about Tesla and tweet about getting fined from the SEC. So he's got a track record. And this was even before I was investing and I heard about him doing all this sort of stuff. So I don't know. He's a kind of person, like, he's brilliant on one end, but he's like a double-edged sword.
Yeah.
Right? Like, you'd want him to maybe be the leader of your company at one time, but at other times you wouldn't want him to. And I think I'm starting to lean to, I don't know if I want this guy.
No, I don't think I would want him as my CEO
anymore. No. I used to, but now his recent antics have just...
Yeah, I'm not a fan of him too now.
Not anymore. Yeah, I'm not. I was, and I don't know. Yeah, he just changed. Yeah.
It doesn't make any sense, though. Like, he founded, PayPal.
Yeah.
And, he was brilliant there. So, what's changed? Like, it's almost like he's gone reverse. He hasn't matured.
I don't know. Maybe it's the fame. Maybe it's the money changes you. Maybe it's the pressure.
Yeah, that's true.
You know how many companies he's got like now? 4, I think.
Oh.
SpaceX, Tesla, Boring Company.
Hyperloop, something.
Yeah, maybe there's another one. Like he's got like 3 or 4. So
Solar company.
he's incredibly smart. That's the thing, right? We know this guy is like smart, but he's just
emotional.
Yes. He's very emotional. And is it part of some grand plan? Maybe. You know, these super very smart people. They've always got a hidden agenda with what they're doing. You know, even with Twitter, the reaction to it is, I think their share price is less than even before he went for the merger. Why do you think that's happening?
So, why the stock's down?
So much more than before he even was interested.
I think, I'm not sure, to be honest. Like, I mean, maybe people didn't expect the deal to go through or something, but yeah, I still can't wrap my head around why he would want to buy Twitter. I mean, it doesn't make sense financially, so yeah. What do you think?
No, I was going to say the level of uncertainty. I mean, if you're a Tesla shareholder, you know, 1 minute Musk is going to buy it, then he's not, then he's been taken to court. You know, you don't want that volatility in any of your investments. Yeah. Like, you know, it's just mental.
Yeah. It's a lot. It is a lot. I'm even considering selling my Tesla shares. I've got Tesla. I'm up. I might just sell it.
Do you mind if I ask what your average price is?
I think, you're testing me here. I think it's in the 500s. Okay. Or 4.
How come you bought it?
How comes? Good question. When I bought Tesla, okay, I'm going to tell you one of my beginner mistakes, right? Before I bought Tesla, I thought it was too expensive, right?
Yeah.
And it kept on going up. And this was me being a beginner, right?
Yeah.
It kept on going up. I was like, crap. Even though I think it's too expensive, it keeps on going up. Not even like a little bit. Yeah. It's going up way more than my expectations. Like, okay, so am I wrong, right? So I got a bit of doubt and then I bought and it's up there. So I'm at the point where I'm considering selling it and just getting rid of it because I don't know if not that I don't like Tesla as a company. I like them as a company, but I think where they are, they're way too expensive.
Yeah, I think you got to take risk off the table at this point.
Yeah. I've got the return, so I can actually take it off. It probably will come down a lot. Yeah. It probably will.
I mean, the pendulum swings both ways. Like, it's gone up a lot, it's going to come back down a lot. Just look at stock market history.
Yeah. And you know, the funniest thing, I'm actually not like, you know what I was thinking? Literally on my drive here. I was waiting past it. It's like, why are people so mesmerized by a car? It's a car. It's a car. It's not an iPhone. It's not a laptop. It's a car. Yeah. Like, not to say cars are not nice, but it's a car.
Yeah.
Do you know what I mean?
What was I was listening to Howard Marks, right? Yeah. He says people get fascinated by something new and they tend to hype it up more. Yeah. So in 2000, technology, internet, it was a new phenomenon. So people were hyping it up more, and now it's like Tesla, you know, EV, and they'll hype it up more. And I think Elon Musk has kind of went along with it, and it's just created this overvalued company that can't justify what it's currently doing. And
what is it, in the top 10 most expensive, I think, right now?
Yeah,
in the US.
Yeah. So I think, you know, if I know some people who have literally their only stock is Tesla.
Really?
Yes. Yeah.
You're joking?
I'm not. Like,
why?
I don't know. That's just...
I mean, okay, even if they wanted to be like, okay, I'm going to take a bit of a punt on Tesla, right?
That could be the worst mistake of your life.
Yeah, one or two. No, but I'm saying, I don't mean your whole portfolio, maybe like a percent, right? Oh, yeah. But your whole portfolio, 100%? I mean, there's no company in the world that you should put 100% of your portfolio in.
No matter how certain you think you are.
None. There's zero companies because they all can, unfortunately, of course we don't want this to happen, but they can all at some point go bankrupt.
Yeah.
You know, like in the past, some of the biggest companies have gone like that.
I mean, Tesla almost went bankrupt 3 times. So. Yeah. It's not a possibility.
Wow, 100% of the portfolio. That is...
Yeah.
insane.
But when you was talking about Tesla kept going up, it's like a psychological thing.
It is a psychological thing, and I don't care about it now. Do you think I don't care about Tesla now? But at that point, is a psychological thing. Up. And now my psychology is different. I'm waiting for things to come down.
Yeah, a lot of people don't think that way. Like they think on the upside. So,
Okay, so what companies are on your watch list at the moment?
So, I mean, for me, PayPal, I sort of use it. VipShop, which is
what's VipShop?
VipShop is a Chinese
flash sale company.
Yeah. Never heard of it.
So it's a company
small cap, medium cap, I think.
Okay. Are you guys? Is that where you're looking now? The small, medium cap exactly. now? Yeah.
I mean, to be fair, I don't care about the cap size personally.
Yeah.
It's not a big thing for me. But the return on invested capital, the valuations of it just made sense to me.
Okay.
So that's one I put on my watch list. Games Workshop as well.
Have I? Yeah, I've heard of them. What did it? Yes, them. Yes.
And their return, like it's almost like a joke when you like balance sheet.
Is it? They just provide games? Is it?
Yeah, they just literally provide
like figurines and
things. They're extortionate.
Figurines?
Yeah, like
really?
You think their balance sheet is cooked up? Like
wait, hold on. So you're telling me there's
figurines?
A company makes their money just based on figurines?
Yeah,
and people pay
like board games as well.
Okay, board games. Yeah.
Like their return on invested capital is 20 plus.
Yeah, 10 or 20 plus. Clean balance sheet.
Listeners again. Return on invested capital. You know I have to do this.
Right. So I'm trying to think. Basically, if a company takes sort of like cash and they're like, okay, we want to invest this money. It could be like a candy company buying a shop.
Yeah.
And that return on investment in that candy shop and then whatever that percent is.
Okay.
That's basically how it works.
Okay. Perfect. So this company is their balance sheet is strong. Their financials are
good growth as well. Yeah.
Wow.
UK company.
Okay. Finally, a UK company. Yeah. Yes. Because we're not, I don't know, it's not that we're not innovative here, but maybe those companies are not matured, they're not grown yet. Maybe in the future we'll have a few more. Okay, cool. And which one did you mention before? You said PayPal. Let's talk a bit about PayPal, right? So why haven't you pulled the trigger yet on PayPal?
So personally, I mean, to be honest, just lack of cash.
Okay.
Cool. But yeah, PayPal is just an amazing company. Like,
it is. I do like them.
It's incredible. I mean, I didn't realize all the things they do. It's just incredible. And we spoke about competition, and there's not that much competition. To be honest, I'd welcome the competition. Like, obviously, it encourages innovation, etc., in the fintech space. But you know, how much was it? $300 at its top.
It was like $300. Like it was crazy.
What, the stock price
before,
dropped 70%.
It's dropped a lot. Yeah, it's dropped a lot. I think
it was a huge hike.
Yeah, I don't know what happened. Like why people have just. I can't remember what the reason was for. Was it guidance?
Yeah, it was guidance.
Slowing,
yeah,
right?
So they were obviously predicted to grow 20%.
Yeah. Then
they said we can do 15%. The stock tanked massively.
We could do 15%.
Yeah, and then after
saying that?
Next quarter, they said guidance again. We lowered it to like 13 to 15%. The stock tanked again, and ever since then, just kept going down and down. And that's why investors need to be careful with these overvalued companies.
Yeah.
Like any little bit of bad news, and the stock is down 40, 50% after market. Like, you're in trouble.
Yeah.
So, yeah.
Yeah, PayPal is an interesting one. I do like them. It's like we were speaking off camera about them, and I think some of the investors that I watch are concerned about them because obviously they think competition, Stripe, namely. You've got other competitors there with lower fees. Yeah, Square is another one with lower fees. But like you were saying, Josh, I think I welcome competition. I don't think Square or Stripe right now could squash PayPal.
Absolutely.
No. It's just, I just don't think that's going to happen. And I think, therefore, to me, it's got some form of moat, right? If you can't just, it's got some form of moat. Let's be real.
Yeah.
PayPal is the known, I mean, even like, okay, I'll give you a simple example. For instance, when we were, if people wanted to donate to our registry, right? One of the options was PayPal.
Yeah.
Stripe wasn't there. Square wasn't there.
Exactly.
Right? Some things is, you know, little things like that, right? And I'm not a company, right? So imagine more so, a company. So yeah, PayPal's definitely one that I like. It's one I'm watching though. I'm watching a little bit. Yeah, because it's the depth. I'm a bit concerned. It's just
maybe
concerned.
go for a higher, discount rate.
Yeah, no, it is. Yeah, I think I did, and yeah, it lowered it a little bit. But I like them. I like PayPal. I like that they're beaten up, right? I like that they're beaten up compared to if you compare them to like the other places. I think the fintech area. That area is a good area to look at right now. If you can find I think you can find undervalued because they've been beaten down badly at the moment. So, you mentioned one other stock that I wanted to talk about. What was it? So, Games Workshop,
Games Workshop, Vip Shop. We spoke about PayPal. There was another one. To be fair,
Team 17, that's another one.
That's one you're looking at.
What's that?
Too much into that.
Team 17, it's like, the Get Worms, the game.
Yeah.
Yeah, they're the makers of
They're
stuff.
still playing that.
Yeah.
They still like Super Nintendo, didn't they?
Yeah, is that still about that game?
The company's growing at that insane rate. Like, they've got literally zero debt. Like, there's strong cash flow, strong return on invested capital.
Wow.
I think they've got a buyback going on as well.
So, on their shares. I'm sure that their shares are.
Yeah, I think it's like a small cap company as well.
Really?
Yeah. Just waiting for the right price, really.
Wow. So how did you find that company?
How?
Yeah.
Lewis, he mentioned it to me, my friend.
Okay.
He was meant to join us, but he lives far. But he mentioned it to me. I looked at it, I liked it, and I decided to analyze it. Just waiting for my price now.
Okay. How far is it from?
Probably have to drop another 20% maybe.
Okay, 20%. In this market, it probably could.
Yeah, that's very doable.
Yeah, I think drops are gonna happen. I'm not one to like try to predict things at a certain point in time, but as I was mentioning to Wes that I think I'm looking forward to Q2, but I think Q3, Q4 is when will hit the fans basically. I think so. I think Q2 might seem happy days. I think Q3, Q4, I think it's going to be a bit delayed. I don't think we're going to see it straight away.
I mean, what's interesting is I literally published it today. I wrote a blog on the returns you can expect from the S&P 500 index funds and why DCA isn't always the best approach you can take. And if you look at the Buffett indicator and valuations currently and the returns we can expect over the next sort of like 10, 5 years, it's not great, and there's still some downside to go. Yeah. When you look at history, and obviously you can't take it as an absolute, but history does tend to repeat itself.
So how much do you think is going to go down?
50.
You think 50?
50 more percent.
Wait for the S&P 500?
Yeah, 50 more percent.
50% downwards, okay.
From today.
From today?
Not like today, but I'm saying
today.
We'll hold you to that.
Okay, 50%. Okay, cool.
So personally, I'm not too sure. I mean, 50 is very doable.
Yeah.
It's not outlandish. It could go further, but probably around that range, I would say. 50,
okay, 50.
Yeah.
Okay, 50. Okay, so there might be some people invested in
we're
S&P
not trying to scare you, just
index funds, ETFs, and stuff like that. And obviously, they probably got like it on an automated plan that they're investing in, so they might not even touch that. Okay, yeah.
Just stick to your process.
Yeah. Historically, it is over the last 100 years. Okay, so 50%. Why 50%?
I mean, I looked at the Buffett indicator, and for it to be undervalued, it needs to fall 50%. What is it currently?
So currently, I'm trying to think of the standard deviation. So, I believe it's one standard deviation away from fair value or historical trend.
Yeah.
Okay.
So to be fair valued, it needs what we can consider fair value to probably needs to drop about 60-70%.
Okay.
I would say fair value probably needs to drop about
40.
40.
And then there's like the Schiller PE as well.
Schiller PE, I can actually analyse that much. I need to do a blog post about that, to be honest.
Yeah, I think that one's at 30 right now.
Okay.
And obviously the historical PE for the stock market's 15, so...
Okay, historical 15. Okay, so about half. What if I told you that there was a platform that allows you to see how you're spending all of your money across all of your accounts, especially at a time where the cost of living is at its highest that it's been in years. What if I also told you that this platform also allows you to see how much income you are getting every month across all of your accounts, as well as helping you to set budgets for all of your expenses? It doesn't stop there though. This platform also helps you to send a record of your rent payments to Experian so that it is recorded on your credit report, which can help to boost your credit score. This platform sounds amazing, right? Well, this platform is called Money Hub, which you can download for free by tapping the link in my description. You get access to premium features free for 6 months, 6 whole months with no auto renew. And then if you decide that you love the app and the platform and you want to continue with premium features, then it will only cost you £1.49 per month. That is the deal of the century, right? Well, go and download the Money Hub app right now.
I've got a question. It's kind of related to what you just said. Wes, how many times, you might not have this without your computer here, so maybe this is one for, or we ponder this thought, right? How many times has the S&P 500 over the last 100 years been undervalued? You get the question I'm asking, right? I guess why I'm asking that is because I'm trying to find out how many opportunities do we get for it to be undervalued? Is it once in 100 years? Is it once in 50? And is it always like 50% of those times? Is it always overvalued? You get what I'm saying? Right here.
Right, so you've got the Great Depression.
Yeah.
That was the first
That was big. That was 1929, right? Yeah.
And then it was, is it Black Tuesday or Black Monday? I can't remember.
Black Tuesday.
Black Tuesday. Then you had the...
That was 1940s, I think. Yeah. And then 2000, so 60 period.
Then you had 2008.
Yeah.
And then, so yeah. I mean, there's probably been other times.
And the 2008 wasn't even really stocks. It was more the mortgage side that impacted everything, went down, right?
Stocks, like, if you bought stocks in 2008, you were laughing.
Yeah, especially banks as well.
Banks.
Our banks were crushed. I mean, come on. I mean, banks went out of business. Have you ever heard of that? Like, banks actually getting bought out, getting bankrupt, right? Like, it's not normal. So, yeah, that's the time to have cash. I mean, you see the difference is, obviously I wasn't invested in 2008. So another thing that I'm even thinking about or contemplating, in 2008, I know we've got more information now. In 2008, not the predictions, but were people talking about a recession and this happening the way we are? Because we talk about a recession so much, like we're like anticipating it so much, right? So I'm wondering, is it going to happen because we're anticipating? Whereas in those times, did it just happen like that? And they were like, what's going on?
Have you watched The Big Short?
Yes,
yeah,
I have.
So I think literally the market was overvalued, but it wasn't like absolutely mental like it is today. Nowhere near as overvalued. So the likes of Michael Burry could obviously see the catastrophe that was about to occur, but the valuation was nowhere near compared to today.
Okay. So they were definitely in shock. I know Michael Burry was shorting mortgages and whatnot, and there's a few other people, but majority of people were shocked. Whereas now, majority of your biggest firms, Morgan Stanley, all of that, JP Morgan, they're quite pessimistic actually about it right now. So it's almost like we're bracing for it.
At the moment, it's like a slow bleeding, isn't it?
Yeah, we're bracing for it. We know that interest rates are going up. We know that stocks are overvalued. Like, it's weird. It's I mean,
even after this, 20% jobs, it's still expensive. So
it is. There's a lot of
I think a lot of people, what they're mistaking right now, they say discounts all around. To me, I mean, discount in terms of like what the stock price is, but it's not discount to intrinsic value. There's a huge difference. And I think people need to realize that.
And that's what really annoys me is the term buy the dip. Because, I mean, it could dip and it's still extremely overvalued. And that's what happened with a lot of like Tesla fanboys when the stock drops. It's like, it's dips and it's like, it's still fucking overvalued. No offense to yourself. Like,
no, that's all right. I'm not a Tesla fanboy. I'm not. I know Tesla is I think you have to be honest with yourself, right?
Exactly.
I'm not delusional. That's why I saw this is a car. Like, I'm not delusional. Some people are absolutely delusional. Tesla's going to be 4,003. I'm not. Do you know what I mean? So I know that there's a risk. I know actually, should I just sell now? Maybe if it crashes to 100, I can get back in. I'm happy to do that. Like I'm not wedded to the business. So it's a very interesting one because I don't think you should be wedded to any company.
100%.
I think you should. So this is where it becomes interesting, right? As investors. So I've got a hypothetical situation for you. So imagine, you're investing in your companies now. Imagine Baba, it got to your 10-year target within the next 2 years. What are you doing?
I'll probably sell it because there's probably a bit of hype there. Then if it reached what is meant to achieve in 10 years, in 2 years, probably liquidate the whole thing.
Yeah.
I would personally reevaluate the situation, do a DCF check on it, see if the stock is overvaluated, see why it's risen so quickly, and then evaluate the situation. I mean, 99% of the time, if that did happen, it's overvalued.
Yeah.
So it would be time to get out.
Yeah. Very interesting. And I think that's why it is quite important to have a sell price target, even as investors, right? Have a point where you're ready to sell, not just a date, but a price. If it hits your target, you're out there. Yeah. Right?
Yeah, you don't want to be stuck with the stock when it comes back down.
It's
painful. Yeah.
It's very interesting.
I would personally argue with sell prices. I mean, it depends on your time frame. I mean, you could have a price target in 10 years, but if the numbers have changed and everything's different and it's looking a lot more up or potentially down, then you should lower or raise your sell price accordingly.
I think it's definitely one of those things that you have to properly evaluate because there are some companies that you may just hold on forever. Google, if you get into Google, good price. Apple, a good price. You might Berkshire potentially as well. You may just want to hold. I mean, Warren Buffett, he's held most of those companies for a long time.
Since like the 80s.
Yeah. So he had no intention of selling. He had no intention. He's just continuing to build, provide value, give dividends, whatever. So it is very, very interesting. Okay. So what's your next moves in stock market? Are you just trying to just invest in the companies that you think are valuable right now?
For me, I'm just remaining patient, really. There's not much out there for me to look at. So just got to relax, waiting for stuff to come down to my buy price. I have a lot of stocks that I've valued, and whenever they hit my buy price, just go in, really. So it's just a waiting game.
Yes. What about you, Josh?
And similar to Wes, although the one thing I would add is I think like me and Wes, we've been like searching, digging, trying to find these good value companies, and there's hardly any. But there's going to be a time where there's absolutely loads, and we're going to be overwhelmed. And I think from that, what I want to take a step back and like say, okay, which companies do I really want to own, and then also compare the correlations of those companies that I might buy to my portfolio currently and see how that works with my risk and whether it would increase or decrease my risk.
That makes sense. I mean, okay, what's on your wish list if it got to a price that any price you could buy? Of course, everybody says 0 or 1, but if it got to a realistic price, but what's on your wish list?
I mean, where's you got?
So I like Microsoft.
Yeah,
I like Google.
Them too.
Yeah, I think
they're never going away. I think they're just too dominant now. They just.
I wouldn't mind adding a bit of Berkshire. I think they're decent.
I mean, they've got the best investor of all time, or two of the best investors of all time, working your money, right? So,
and then probably, my Games Workshop, really, Team 17, just about it, really. I don't really have much exciting investments, so
Google and Microsoft is as exciting as you can get, because for me, they're like they're very safe businesses, lots of cash, not that much debt, sticky brands that they're everywhere, essentially everywhere. but they've also got the innovation side as well. If they want to do it, look at them teams within a few years, easy for them. Cloud, easy for them. So you get both sides with them. They're not like, I think even like I was saying, the downside with them, you can see in a day like this, the drawdown is because people are just reluctant. I'm not really getting rid. I don't want to get rid of my shares. So
I think with Microsoft, it needs to fall a lot.
I know, more than Google.
Yeah, definitely.
Yeah, way more than Google.
Microsoft, maybe 50-60%
I would love
least.
that. I would love that.
So, I mean, if you look at its, valuation in terms of like price to sales, PE, it needs to fall 50% for it to be fair value in terms of like, the metrics. So, who knows?
So, sorry, Michael.
Sorry,
no, I went back.
No, that's all right.
That's all right. I was going to say, similar to Wes, the ones I would add would be Visa.
Okay. Visa's an interesting one. Yeah, they're everywhere too.
And Taiwan Semiconductors.
Yes, they're interesting. Yeah. Are you worried about China with their independence and?
I don't. I mean, the People's Republic of China isn't going to invade the Republic of China / Taiwan. I think people compare it to Ukraine too often, and they're very different situations. The Taiwanese have been preparing for an invasion since it was founded. So, no, I'm personally not worried at all.
Yeah. It's I've got a few comments on both of the picks.
The one I was quickly and LVMH.
Okay, really?
Vuitton,
why them?
I would love to own them as well. Yeah.
Why? So wait, Louis Vuitton, MH. Is it Moet's under their brand as well? Moet's under their brand. Louis Vuitton.
Touch of these luxury brands.
Why them?
The thing is, when these companies, when we hit a recession, luxury companies like LVMH, boat companies as Marine Max, that's another one. They hit the fan. They really, really hit the fan because their sales just tumble. Because obviously people haven't got as much cash, interest rates are low, people don't use credit cards, etc. So these companies are a huge hit. And you can get them at an absolute dirt cheap price. And if you hold on to them, wait for the economy to recover, your returns can be glorious.
Okay. Are you seeing any downtrends on them at the moment?
I actually haven't looked at the stock price.
I haven't looked at them either, so I have no clue. Them or Burberry. I remember the pandemic, Burberry was going down. But they were like expanding in China. I remember that. But I haven't looked at them, so I might actually take a look.
Exactly. I think it's definitely worth looking into, but it probably needs to fall a lot. Probably need to do a DCF on that.
Yeah. I think I've done one, but I can't remember from the top of my head.
I haven't looked at that. As you mentioned Microsoft, I think it was about 10 years ago. I think at one point, apparently, somebody was saying that their PE was like 10.
I think that was me that said it. I said it to someone. Can't remember. Yeah, their PE was 10. That was when
Can you imagine?
Yeah.
Microsoft.
Yeah.
There was an innovating, apparently, in another world, right?
Yeah. So that's when they were dead. But PE ratio of 10. You're laughing now if you bought it back then. So,
but this is interesting, right? Okay, so hypothetical, right? Because people are making the same argument about Apple right now. Oh, Apple's not going to grow that much. They're stagnating. Their growth, what happens during their cycle is that they have a bit of delayed growth and then a spurt, right? So Apple might run into that. And let's say it downtrends. You think would you be confident in Apple at that point?
It depends. So, I mean, if the growth slows and you pay, a price relative to that growth, it's still a good investment. So, if sales start to slow, it doesn't really bother me as long as I'm paying a price. That's cheaper than what the growth is giving out. So, and I think that's what happened with like Facebook. So, they're not growing in 30-40%.
That's very true. And
a lot of people are scared. I mean, even if it's growing 20-15% at least, it's still a good investment at the end of the day, as long as they're paying an appropriate price. Because paying the correct price relative to its growth is important.
Facebook, they're really doing it dirty. It doesn't make any sense at all.
It's like Microsoft in 2008. It's literally so similar in some situation. What's their PE now?
12.
Yeah, it doesn't make it's absolutely, even if they grow 1 or 2, it's still below. So it doesn't make any sense. Like it doesn't make any sense. And I don't understand I don't know if some people are missing a trick or I'm just like trying to understand.
I mean,
what is going on here?
I mean, this is where you're gonna have to act as a contrarian and think differently. Like, look at the company and see what it's doing. You have to think it's got zero debt.
Yeah,
it's
pretty much.
It's got so much cash on its balance sheet.
Yeah,
free cash flow machine.
Yeah,
and
return on invested
capital. Yeah, it's insane.
I feel like a lot of people are trying to price in that they think that TikTok's coming in and Facebook's ad revenue is going to disappear overnight. Which, come on, like, let's be real. Like, that's not going to happen.
What happens if Congress bans TikTok? Then, I mean, they're talking about it, like, of banning it. I mean, that's going to be good for Facebook, isn't it? So,
we all use Facebook and their products.
Oh, we do. Like,
I mean, you're using Facebook,
WhatsApp, Instagram. I use it multiple times. I use it every day.
Exactly.
Every day.
And think about it, like, people have their family on Facebook. Like, where else they're going to go? They're not going to go to Twitter.
Yeah.
And get in touch with their family.
TikTok,
Exactly. Yeah. So
they'll go to WhatsApp.
Which is
Facebook.
Exactly. Yeah. So Facebook is entrenched in our lives, whether we like it or not.
Yeah. Crazy. Sorry, Josh, what were you gonna say?
Oh no, I was gonna say also the differences with Facebook is a social media conglomerate.
Yeah.
You know, it has Instagram, Facebook, like we mentioned, and it's so diversified, but it's a juggernaut. You know, it's like Apple with phones. No one's gonna be able to compete with Apple, not for a long time.
Yeah.
So, you know, it's got that moat.
Yeah.
Which gives me a lot of confidence.
Yeah, yeah. It's going to be very interesting to see the earnings. I'm very much looking forward to it. Financials. Do you guys look at financials?
Yeah. That's literally the first step.
And I mean financial. Sorry, I should have been clear. Industry wise, like the banks.
I don't do banks.
Yeah. Financial sector.
No,
sorry. Yeah.
I mean, I don't do invest in banks because I don't understand them.
You don't understand them.
Out of my circle of understanding.
Okay.
Similar situation.
Yeah.
Just not understand. There's that metric you can use though.
Yeah.
And it's like, it's similar to P, but in minuses. Like goodwill.
Yeah. So price the book.
Yeah.
If it's below 1.0, then historically banks, insurance usually do well.
Yeah.
So, but for me, even though you can use that reliably, I still haven't got that confidence to invest in like a bank.
Okay.
Because if it goes down, I don't understand why. Like, So I tend to stay away from them. And I think with banks and insurance, it takes industry expertise. And unless you're a banker or an insurance guy, I don't think you should be touching them. Like, it's really risky business.
Yeah. It is interesting because I feel like they are definitely a bit more susceptible to the environment, macro environment, right? Interest going up. Even with the interest going up, everybody thought, it's going to fly.
Yeah.
Why didn't it? Retrospect, because there's not as many deals with merger because the market is not that great. So they're losing money on that end. But maybe they're making more money on the customers. And if a recession happens, default, blah, blah, blah. It's just it's really complicated.
Yeah.
I think, I agree with you. What about you, Josh? What do you?
It's, again, like similar to Wes, it's beyond my circle of competence.
Yeah.
So, unless it was absolutely dirt cheap and that much was evident, then I wouldn't touch it. But again, like, we talk about 2008 and the bank's doing really well. I would have thought, Citigroup, that would have been a really good bank to buy. And that's done shit.
Yeah. Okay. Yeah. It's trading sideways for like 10 years, right?
Exactly.
Yeah.
Like, it's been absolutely dreadful. So, I wouldn't possibly be that confident anyway.
Yeah. And it's weird because it's one of the biggest banks in America, Citigroup. I think it's the second. Is it the second biggest? Second or third? JP Morgan's the top.
Morgan Stanley.
Yeah. Morgan Stanley's not even as big as I thought it was.
Isn't it?
It was top 10. Yeah, surprisingly. I think it was
Bank of America.
Yeah, Bank of America's second. Yeah, sorry, that's it. Bank of America's second. Then third is
Wells Fargo.
Yeah, Wells Fargo. And I think Citi's in that top 5 area. Yeah, but Wells Fargo is obviously the scandals issue. And Citi, I don't know what's happened with them. Yeah, I'm not sure why that happened. Okay, interesting. So your two for the wish list were?
We spoke about LVMH, Visa, and
why Visa?
I mean, Visa. I mean, it could be Visa and MasterCard, really. Potentially both, just to But if we think about contactless payment, not contactless, but like sort of digital payments, etc. They're always going to dominate, and they've got such a moat. And to be honest, I think if you own one of them, you'd still do well either way. I don't think they're one of them is going to become more dominant than the other, like overwhelmingly so.
Yeah.
I know Visa is quite a bit bigger, but it's not going to be, MasterCard's not going away anytime soon.
Yeah.
So
I think a lot of these a lot of these competitions, they're not like zero-sum games. It's not always just one.
Exactly.
Sometimes people like to have a choice. I mean, I have both a Visa card and I have a MasterCard, and they both serve me well. I think what's an interesting thing about the Visa situation, I don't know if you remember the Amazon situation where they were gonna cancel them because of fees, and they turned around, right? It just shows you even Amazon couldn't get rid of them. So if Amazon couldn't get rid of them, no one's gonna get rid of them, and that's what the biggest platform in the world. I can't remember, was it around fees or something like that?
It's to do with the transaction fees. So every time you use a Visa card at a shop, through that transaction, part of that goes to Visa.
Okay.
And it was too high for Amazon, apparently. So,
what do you think of Amazon as a business?
I mean, it's solid, but the stock, I probably would not want to own the stock.
Yeah.
I mean,
exactly.
Even at any price?
No.
Really?
No.
Okay, talk me through that.
I mean,
at any price.
I mean, if it was selling dirt cheap,
exactly.
If it's undervalued.
But the business, I mean, it's obviously a good business, got a huge moat, but I think there's a lot of risk in terms of what they're spending in capex, crazy amounts. And I don't know, I don't feel comfortable with that. I would like them to, have a bit of shareholder value, pay dividend. I don't know, but I'm just not feeling, confident in the. Yeah. It's not something I'm dying to own or anything. I've got other companies that I prioritize over it.
Yeah.
What about you?
No, I was going to say, I mean, the business model is great. It's really diversified for an e-commerce company. I mean, similar to Barbell, to be honest. The only thing I'm worried about is a lot of their cash flow comes from AWS and web services, but they got into the game really, really early. Bezos saw that, but as competition's increasing, they may see their margins drop on that. So that's one thing that concerns me. But it's an amazing company. It's going to be around for a while. And obviously, if it was dirt cheap, you would buy it.
Yeah. That's what I was going to say. AWS is definitely like the X factor for them. And it's weird. I think Jeff Bezos leaving has hindered them. Yeah. Of course he had to retire. I mean, he's been doing the business, 20 plus years, and he's built it into a monster, everything, right? E-commerce, AWS, they do streaming as well, right? So then everything. But I'm with Wes. I'm a bit, not that I wouldn't buy them at any price. I think I would, but there are some concerns. There's something about them.
Just give me this vibe.
Their costs, I don't know, just seems just too high. I just feel like it's difficult for them to make a lot of profit with their type of business. I don't know if that's because I think they do the whole end to end again. I think from ordering, and I think maybe that's where they're spending all their costs. And even then, you get talks of underpaying workers. So imagine even that, right? And they're still not making crazy amounts of money. They're underpaying. So
and the unions are a big, Bezos really, really tries to stop workers unionizing, which makes me a bit worried because it's if they unionize, which power to them. If that's a huge issue, then, it highlights a potential fragile business. Yeah. So.
Yeah. And with Amazon, I thought their retail business don't make money, but it all comes from AWS. And what I was thinking is maybe Amazon should spin off the AWS. I think that would be, it would unlock a lot of value for AWS.
I would like them as just an AWS business.
Yeah.
I think a lot of people would, just as a cloud business. Definitely. Yeah, no, it's been good talking to you guys about investing in the stock market. Do you have any final words for the listeners?
No, I was just going to say, be prepared for the market to drop quite significantly in the next 5 years. But apart from that.
I mean, just stick to your process. If you're an index fund, keep dollar cost averaging. Don't get spooked out the market. Things will get better, and just just relax, really, because
Stay consistent.
stay consistent. Yeah, exactly.
Yeah.
Always have a process, and that will get you through difficult times.
Yeah, agreed. Yeah, I think it's all about definitely being consistent with your process. And yeah, just don't watch the numbers too much. If you see it's going now red, don't let that spook you out, because you could miss out on a lot of returns in the long term.
Because I know a lot of people DMing me saying, I'm waiting for all the bad news to come in before I buy. Yeah. So I'm like, no, that's not the right way to approach it. No. Don't time the market, because you can't. Yeah, you're going to miss out on a lot of gains. Just, if you're buying individual stocks, find its intrinsic value. If it's under your buy price, buy it. If it goes down more, check your work and buy more. If thesis hasn't changed, that's simple. Yeah.
And keep refreshing it. Yeah. Keep refreshing it all the time.
Don't worry about it. The market's going to drop quite a bit.
Yeah.
That's a good thing.
Yeah. Because for me, the stock price is irrelevant to me. Like, it doesn't tell me anything about the business. So you need to have that mindset.
It's true. Imagine, like, I know we're supposed to be ending. It's like, imagine there was no news, no nothing, and you just saw, or even if you didn't see the stock price, right, and you just saw the financials, what would you base that on, right? If it's just buy and sell, and I know you do the valuation stuff like that, right? That's how you have to kind of look at it, right? It's not, you're not doing it purely on just looking at stock price. Okay, it's down 10. Okay, it's up 10. I'm gonna buy. It's not the right way to look at it. And Warren Buffett said something very interesting as well, where he says, buy companies where
you would hold it for 10 years or something like that. Yeah,
exactly. And you're not gonna switch in and out. Right? You're confident that 10 years you can hold this. So it's been great speaking to you both. Thanks for
thank you for having me again. Pleasure.
Yeah, we'll definitely do a few more. And thanks for listening to this week's episode of the Takeoff Podcast. We'll see you next week.